So, welcome everyone. I'm Alexander Mihalcha, and today we're joined by Tim Ganie, Managing Director of Wiles Alpha. Thank you for being here.
Pleasure. Good to see you again, Alexander. Thank you. Thank you for having me on the show.
No problem. So, before we dive in, could you give us a quick overview of what Alpha does?
Yeah, absolutely. So Wise Alpha is a fractional bonds technology solution. So it enables both individuals, people like you and I, to invest in corporate bonds in fractional sizes. So instead of needing say, £100,000, which is typical in the bond market in Europe, we enable clients to invest anything from £100 in large companies like Goldman Sachs, Ocado, and others. But we also have a technology side of the business to enable our partners, such as wealth managers, banks, and brokers, to use that technology on behalf of their clients.
Okay, that's fascinating. And what inspired you to create Wise Alpha? Was there a specific moment or experience that sparked this journey?
Yeah, well, I mean, I can't take the credit. So I'm not the founder or CEO. That's Reza Ahmed. And his background is in leverage finance. He has a deep background in the asset class. And my understanding from him is, he saw some of the challenges in the bond market when he worked at some reputable firms and, even trading for himself. He uses the example when he tried to trade, one bond. It took, all day to fill the order and he had to trade in the minimum size, only £100,000, and so saw a clear need for a solution, both from a fractional perspective, but also, bringing it on to an electronic platform which we have created. But my role at Wise Alpha is I head up partnerships for the business, so I'm involved in both distribution partnerships with banks, brokers, and wealth managers, but also looking at how individuals can better use the solution to people like you and I as well. So B2C as well as B2B.
Right. And let's go back to when you first started. What major challenges or gaps did you see in the market and made you think this needs to be solved?
Yeah, I mean, as I said, I didn't start the business, but yeah, in terms of why, I think
Yeah.
that the clear gap in the market is, if you want to invest in fixed income, you just think, Alexander, if you want to, you may buy shares, a lot of people do, but if you want to buy bonds, where do you go? Maybe you go for a bond ETF or a bond fund. I don't want to put answers into your mouth. So I mean, maybe you tell me if you want to invest in fixed income, where would you currently invest?
Yeah, it's kind of tricky.
Yeah, so the issue is for individuals that may be used to buying, say, Apple shares, Ocado shares, and so on. They may also want to buy the bonds, which are lower down the risk spectrum. And so we wanted to give a solution for those clients and give clients direct access to the asset class, which we've enabled clients to do without needing the £100,000 minimum, which for most clients is far outside of their reach. And so that was the issue we saw. And then, we've created a solution to provide for that.
Okay. And could you elaborate on why the existing solutions weren't meeting these needs?
Yeah, I think from my time in wealth management, I had a privilege of working in wealth management for about 10 years, serving some of the wealthiest clients across the UK. And even at that scale where, clients may have anything from £5 million upwards, you are still largely investing in bond funds or bond ETFs, which do have a place in a portfolio, but they don't necessarily meet all of the needs of a client. So, for example, when you invest in a fund, because you're not investing in directly the underlying bond, you're not getting the full benefits of that bond. And so, what I mean by that is for the majority of UK corporate bonds, they're considered qualifying corporate bonds. There's a long definition on the HMRC
Yeah.
website, but essentially it means that those bonds are free from capital gains tax, which is great if you're able to buy those bonds at a discount. Bonds, as you know, typically issued at 100. And so if you're able to buy those bonds at 50, 60, 70, which for some of the long dated bonds we are seeing right now, just because of where interest rates are. And so the price of the bonds, some of those long dated bonds has come down. It means you're able to get a capital gain which is tax free, and that's hugely
Yeah.
advantageous for especially
Right.
the higher rate taxpayers. And so that's one reason. I think another reason is, when you think of clients, sometimes they want to marry up their expenditure requirements with income that they're getting from their portfolio. Now, with a bond, a corporate bond, typically you'll get an interest payment every 6 months. And so the beauty is you could create, a have multiple bonds in your portfolio, paying coupons at different times to meet those needs. Now, with a fund, you may get, if it's a distribution fund, you can get a payout perhaps once a quarter, every 6 months, but it doesn't give you the same flexibility to tailor the portfolio to your own preferences. So these are some of the differences. And also, when you think of, some clients like to invest based on their, ethical preferences, or just their sector views. Maybe
Yeah.
they want to invest in pharmaceuticals or retail, or they don't want to invest in financials, whatever it may be. Being able to select bonds yourself as an individual gives them the opportunities to make those choices. But another beauty with our offering is we've created a robo management portfolio tool, which we call robo-wise, and that enables the client, Alexander, to invest in the bond market in a similar way to an ETF. But the beauty is they can tailor it to their own preferences, like I just described,
Okay.
and then let the algorithms just do the hard work. So they can set it up, take a back seat, and then be invested based on their wishes.
Okay. Okay. And what was the breaking point that made you decide to tackle this problem?
So I think there's been some talk of tackling the problem of accessing the bond market for a while. So the London Stock Exchange have tried that through the order retail book for bonds, where minimum denominations are £1,000, and so that provides some access. But there's been very few bonds listed on the London Orb over the last decade, and so we saw there's a huge gap in the market. And also, when you think of accessing the bond market, really you want to provide access to the institutional corporate bonds, not the retail bonds. And so the retail
Yeah.
bonds were the ones that were being listed on the London Orb. The ones on our site, on Wise Alpha's marketplace, are for the most part institutional corporate bonds that we fractionalized in size of £100. And so that market is far deeper and liquid, which means it's easier to trade in and out of for clients. And it's a much more appealing part of the bond market. And so, we saw a need. There's been discussion about how to solve that problem across, regulators and also key finance institutions. But Wise Alpha are really leading the way in actually providing a solution right now for clients to access the asset class.
Yeah, that's really great. So walk us through how Alpha addresses these challenges. What makes your approach unique?
Mate, can you say that again, please? Because I can hear you so well.
Yeah, so no problem. So walk us through how Wise Alpha addresses these challenges. What makes your approach unique?
Well, I mean, Alexander, I think the great thing about Wise Alpha is we are the only ones actually solving this problem, certainly in Europe. So the what you find is there are some other companies that are talking about fractional bonds in some way, shape, or form. But there aren't any other companies in Europe providing access to institutional corporate bonds on a fractional basis.
Yeah,
So, that is really the uniqueness of it. Is if you want to buy, I'll take the example of Ocado again, a bit of Ocado bond, the only way you can do that is through Wise Alpha. There is no other way to access corporate bonds in Ocado on a fractional basis.
yeah.
So that is the beauty of the offering. You're able to really create a diversified bond portfolio alongside your equity portfolio that you may have elsewhere.
Okay, okay. And I have a curiosity. This comes from my mind. What technology challenges did you face in building Wise Alpha Digital's marketplace?
I mean, I think from a tech perspective, which is not my forte. But our CTO has a deep background in building applications for global banks, such as HSBC and other institutions.
Okay.
So I understand, there's always challenges within technology and building a solution. But I think because of the depth and breadth of our team, we've been able to overcome those just because of the experience that we have, both from an asset class perspective across the credit team and our CEO, and then from a tech perspective that we have with our CTO and his team. So there's been no challenge that we haven't been able to overcome. So to give you an example, we've had the privilege of working with a leading bank in the UAE to solve a challenge over there of clients accessing sukuk on a fractional basis, which are Sharia compliant bonds. And now, typically, you need $200,000 to buy a sukuk, and so that's even a greater challenge than UK corporate bonds. And so, through our technology, through our operational structure, we've been able to build a solution tailored to that market. And so there's obviously been some challenges along the way. It has to be compliant with Sharia and go through various compliance and legal frameworks within that jurisdiction. But that has been signed off by the Prime Minister of Abu Dhabi, and it's something that we are leading the way, in the UAE as well as the UK.
Okay, okay, I see. And when you talk to potential clients, what's the biggest misconception they typically have about what you do?
So we have two sets of clients. We've got the organic clients, so people like perhaps you and I trading bonds, and then we have the B2B, the partnerships, so banks, brokers, and others. I don't know whether there's been any that I can think of kind of misconceptions as kind of you ask in terms of individual clients using the products. I think it's quite easily laid out. I think one of the things perhaps, Alexander, has been not everyone is so familiar with the bond market. We perhaps are more aware of what's going on in the S&P 500 as opposed to what's happening in the corporate bond market.
Yeah.
And so what we try to do around that is build an education solution. So for example, we have the Wise Alpha Bond Academy. It's a very simple way to get educated on the asset class, right from across 5 units, right from the basics of what is a bond to some advanced math that you might find in the CFA qualification. And so that's how we've tried to solve that challenge. When it comes to B2B partners, there's also an education, but it's a different kind of approach.
Yeah, right.
It's sometimes, although wealth managers are very experienced across asset classes and financial planning, there may not be that in-house fixed income expertise. And so that's where we can lend a hand, just pointing out some of the nuances in the bond market, even discussing the qualifying corporate bond nature that we touched on earlier of a bond, and explaining the benefits of that versus investing in a fund. That has been helpful for conversations that we've had.
And could you share a specific success story of a client who saw significant results using your solution?
So just to, I guess, elaborate on the UAE partner, the bank in the UAE, that is about to go live. And so the success we've seen so far is, when they turned it on for initial sample of clients, there was huge take up. So the sample size of about 1,000, that was taken up over the course of a weekend with very little marketing. And so I think that just goes to show the level of demand there is for access on a fractional basis to fixed income, and we have the solution to provide that.
Okay. And looking at the broader industry, what key trends are you seeing emerge?
When I think about the industry, I guess there are different parts to it. I think within wealth management, which is part of our target market on the B2B side, we're seeing a lot more robo management type advice, more automation for advisors, more centralized approach to their investments, as opposed to perhaps having autonomy as a individual advisor within a wealth management firm. So I think that can lend its hand very well to Wise Alpha, because we have the robo management solution that we discussed, and that can be tailored for each wealth manager. So, they can set up predefined portfolios, as many as they wish, based on their own in-house view. And then it's very simple for the advisor within that wealth management firm to select portfolio A, B, or C, for example. And so that's something that I think is happening in terms of wealth management, and kind of we have a solution for fixed income there.
Yeah, so how are these trends affecting how businesses operate in your space?
Okay, well, I guess in terms of businesses in our space, I think we're the only one. So I mean, in terms of fractional bonds, so I think it's touching on what I said a moment ago. It's offering a solution to a more automated and centralized way for advisors when they provide investment solutions for their clients. And so I think the robot management tool that we discussed is the solution for that challenge, or for that trend, as you said.
Okay. And I have a little curiosity. How do you balance innovation and growth with regulatory requirements?
I mean, that's a great question. We are regulated by the FCA, of course. We have been ever since September 2016. So I think one, we always have to adhere to regulation, and quite rightly, it's for consumer protection, and making sure consumers have the right guidance before making investment decisions. So we follow that guidance, but we have dialogue. And so if there's something we need to check, work on, we always want to make sure we're thinking about growing and expanding the business. We don't want to hold back from that, but we also want to make sure we're doing that within the regulatory framework that we reside in. So, it's just working very closely with the regulator. We have a compliance officer, that makes sure we follow those guidelines.
But advices for business owners who want to stay ahead of these changes.
Yeah, I mean, what changes specifically are you referring to?
So yeah, changes about the trends. How can be optimizing about the trends.
I see what you mean. Yeah, so I guess always speaking to prospect clients, understanding kind of their needs, their challenges. Going to events, trying to speak at events if you can, and just really staying close to the markets that you're trying to serve.
And as you wrap up, what's next for Wise Alpha? Any exciting developments on the horizon?
Yeah, I think we're on the cusp of tremendous growth. I think both in the UK and in the UAE. And so, for example, in the UK, we've just launched our UK corporate bonds innovative finance ISA, and all clients in the UK can access bonds through Wise Alpha. And so that's a huge opportunity for the business to expand. And so we're making a lot of making clients a lot aware of that. In terms of growth outside, in terms of the UAE growth, we're seeing a lot of interest now from other companies, given the opportunities we've had already to work within the Sukuk market. And so we expect to expand both in the UAE and in the UK. So that, we're expecting a lot of growth over the next 6 to 12 months.
And for listeners who want to learn more or potentially work with Wise, what's the best way to get in touch?
Yeah, I think anyone's welcome to email me directly, tim@wisealpha.com. Obviously, there's the website wisealpha.com. It's a good place to kind of see what we're doing. But yeah, that's feel free for getting in touch.
Perfect. Thank you, Tim. Thank you for sharing those insights about you, about your company, and the whole story. And thank you for this amazing podcast session.
Pleasure. Thank you, Alex. Appreciate your time. Take care.
Good. See you on the next episode then.
See you soon. Thank you. Bye bye.
Bye.